Good morning, everyone. I'm Greg Faranello, head of U.S. rates for AmeriVet Securities, and welcome to another edition of Monday Minutes. This morning, I'd like to start by giving a big thank you to Maria Bartiromo and the Fox Business Network for including us this past Wednesday to talk about the geopolitical tension in the marketplace, impact on the market, and the Federal Reserve. So, in speaking about the Fed, we see two themes emerging pretty quickly here in 2020. Some of those themes were present in 2019. So the ample reserve policy. What will the appropriate size of the balance sheet be? We had the recent repo hiccup. We're working through that with some of the temporary market operations in conjunction with permanent increase in the balance sheet, really more directed right now toward currency in circulation. With regard to the temporary operations, the challenge with the Fed will be their new framework, right? So the old framework, temporary operations used to be a consistent part of how they manage the Fed funds rate. But the chairman's been very clear. The whole notion of an ample reserve framework is to get away from temporary operations. So the Fed's going to have some wood to chop here in the first quarter of 2020 as they transition away from temporary operations and come up with a more permanent and structural solution. The other key theme is inflation. And if you look at all of the Fed speak over the last month, in almost every conversation, the notion of inflation expectations has been front and center, but not managing inflation from the upside, managing inflation now from the downside, which is a new concept for the Fed. So when Chairman Powell spoke at his press conference in December, he said he wants to see a significant rise in inflation that is also persistent or sustained. So unlike last year, where the Fed was very clear with their catchwords of uncertainty and risk management, we think the phrases this year will be significant and sustained. And in our weekly piece this week, we do talk about the different ways to look at inflation. And we had a weak wage number on Friday, which is now on people's radar. Our weekly piece is on LinkedIn. Please feel free to take a look and give us your feedback. But the real question is, how will the Fed define significant and sustained? And it's a real question when we look at current policy, future policy, in terms of what will be the key metric that the Fed will look at, how will they define inflation? They've talked about potential changes to their actual framework, but the inflation story is alive and well and will clearly be front and center in the coming days, weeks, and months in 2020. I'm Greg Faranello, and this is Monday Minutes.